Say you're in the market for a new home, and like most people, you need a loan. This means speaking with a lender to obtain financing. Do you know where to start? Do you even know what to ask? Well, you're in luck because we do, and we want to help you. We created a series on the lending side of the home buying process. We hope you enjoy this content. Welcome back to another episode in our lender series. Today we're going to talk about types of loans, and we have Merve with us here today to hash this out. Let's go for it.
Okay, so to break it out, so we have conventional lending, FHA, VA, and jumbo. So within conventional, you can have a conforming loan, which is backed by Fannie Freddie. It's basically based on the loan limit of the county you live in. So as long as your loan does not exceed that county limit, you are in a conforming conventional loan. Non-conforming loans are typically more, balance sheet loans, bank statement loans. They're not backed by Fannie or Freddie, typically are not sold into the secondary market.
And none of these loans are insured by the federal government.
Exactly.
Yep.
So that leads me into PMI, which is the private mortgage insurance. So with conventional lending, conventional conforming lending, if you put less than 20% down, you will have PMI. It's basically the insurance on the loan. Now, the good thing with PMI on conforming conventional loans is that eventually it goes away once you reach 20% equity in the home. So, it's not going to be on your loan forever. Typically, it's priced through how much you're putting down and your credit score and the debt to income ratio. So there's that. Then we have FHA lending, which is insured by the Federal Housing Administration. And FHA lending, it's called MIP, now it's mortgage insurance premium. It's actually built into your loan. So you can't avoid it. No matter what, you're gonna have it in your monthly payment.
And you have it until you exit the loan or refi or something like that, right?
Exactly. So with FHA, the beauty is that you can minimize your down payment. So typically people want this loan if they want to utilize the 3.5% down payment. But what a lot of people actually don't know is if you're a first-time home buyer, because this is the thing, a lot of people think I'm first-time home buyer, I should just do FHA. No, it depends. So if you're a first-time home buyer and you have good credit, you can potentially actually utilize the conforming loans 3% down payment. Now, your PMI will be higher, but again, it eventually goes away. So if you can qualify under conventional conforming as a first-time home buyer, you should really try to go conventional. The other thing with FHA is, if you're getting a multi-unit property, as long as you're occupying it as a primary, then that's another great way to utilize that loan, because regardless, you can still do 3.5% down, whereas with conventional, the down payment goes higher. The other thing with FHA is you can only use it for a primary purchase. So, because it's backed by the government. So they don't want, they view investment purchases as risky, secondary homes as risky. So because it's backed by the government, they want the least risk.
And it's meant to promote home ownership,
exactly,
right? So
exactly.
They focus on the primary.
Exactly. So next we have VA loans. So these are guaranteed by the VA, the Veteran Affairs, and they're 0% down payment loans. So they're only for veterans. And if you are going to have a co-borrower on the mortgage, it has to be your spouse. Otherwise, the down payment will no longer be 0%. So it's just great. It's a great program for veterans. They can get super high loans, sometimes in the $1 million range, and really, really save on closing costs.
Awesome. And so the next one is the jumbo loan.
Yes, sorry. So now we have jumbo loans. So jumbo loans are viewed as riskier loans. The underwriting process is, multi-layered. These are loans that are above the county's conforming limit. So let's just say Palm Beach County. The loan limit here for 2022 is $647,200. Anything above that loan limit is going to be jumbo. It could literally be $648,000. That's a jumbo loan. So the way it works is basically you have to now follow not just the underwriting guidelines of the lender, but also the underwriting guidelines of the investor that you're going to underwrite the loan through. So it can be quite complicated, but if you're purchasing a high-priced home, it's worth taking that route.
And there's multiple investors sometimes,
Yes.
right? So you're usually shopping investors in this phase.
Yeah, and it's so when I say complicated, because the things we look at credit score, down payment. With jumbo lending, like typically you really can't be putting less than 10% down. The product's going to be horrific otherwise. So 10% down usually is the minimum. So we look at your down payment, your credit score, debt to income ratio. So with conventional lending, you can go up to 49.99. With jumbo, so now we have these different avenues we have to go through. There's limits. So there's a bucket of investors that will only look at you under 43 DTI. Another bucket that won't go past 45. And then, the third tier, which would go up to 49.9. But even at those tiers, then the down payment matters too. So
and rates change, right?
Yeah, rates are very variable. And then if you're buying a secondary home or an investment property, that limits you even further with your down payment. So there's a lot that goes into it, but the key component here is that it's just any loan above the conforming limit for your county.
Great. Okay. Well, I think that covers the types of loans. And so thank you guys for watching, and we hope you found this valuable, and we'll see you in our next episode. If you enjoyed this video, like and subscribe and hit the notification button for up-to-date content. I'm Larry Mastropieri, broker owner of Florida Homes Boca Raton Realty, and I'm an expert here in the Southern Palm Beach County market. Feel free to reach out for any of your real estate needs. Thank you for watching, and we'll talk soon.